Hello, welcome to the European Open Briefing for Friday, February the 17th. I'm Rafi Boyadjian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So it's a relatively quieter day on the last trading day of the week. The dollar dropped to 1 week low yesterday and is currently trading near those lows. And this comes despite very strong data out of the US this week and of course those hawkish comments by Fed Chair Janet Yellen. But the main concerns, although we did have some profit taking as well that dragged the dollar low, there is some concern in the markets about Donald Trump's administration and his policies. The other movers this morning, or yesterday rather, the euro is currently trading near 1 week highs, mainly on the back of the weaker dollar, but there's apparent the markets appear to be ignoring those dovish ECB minutes yesterday were published yesterday, which suggested that the ECB will continue maintaining ultra loose monetary policy. The Aussie is doing not too badly. It's trading near 3 months highs around the 0.77 level. It's being supported by higher iron ore prices, but we did have some weak data out of New Zealand this morning, which has dragged the New Zealand dollar lower. And in commodities, oil was firmer yesterday. It's more or less flat this morning. It fell back a little bit from earlier gains. We had some reports that OPEC may extend its output deal beyond June, and that's currently supporting the crude oil prices. But let's begin with the dollar-yen pair, because we can see that on Wednesday we had that spike upwards from strong US inflation and retail sales data, and it's since drifted lower. It's now stabilized around 113. It basically found support just below 113.1, currently trading at 113.40 yen, and this came after hitting 3-week highs against the yen. Currently, at the moment, though, it's at a 1-week low. We had a press conference by Donald Trump yesterday, where, as usual, it was very much a heated discussion, heated affair between himself and reporters. We had, of course, that resignation by his national security advisor, and he's the new person that the position was offered to rejected the offer, so now there is ongoing uncertainty as to who will take up that post, and of course there's been some other trouble as well within his administration, and all of this has offset the rather hawkish outlook for rates in the United States. Of course, we had a testimony by Fed Chair early in the week where she signaled that rates will go up at one of the upcoming meetings, and we had very strong data as well. And that strong rate data continued yesterday as well. We had the Philly Fed Manufacturing Index jumping to a 33-year high in January to 43.3, and expectations were for just 18 for the index. We also had very good housing starts and building permits data as well, which beat estimates. So overall, the US economy seems to be doing well, but the uncertainty about Donald Trump's policies, and particularly his trade policies, and how he runs his administration, appears to be weighing on the greenback. Moving on to the euro now, we can see the euro has benefited from the dollar losses. The euro is currently trading around 1.0655. And this comes despite very dovish minutes of the ECB's January policy meeting. In the minutes, the ECB set the headline inflation rate. The recent increase in the headline rate appears to be transient, and there's no convincing signs yet that underlying inflation is on a sustained path upwards. And it stresses that it's imperative for the ECB to maintain very substantial monetary accommodation. So that's pretty much sending the signal to the markets that the ECB won't be cutting back its asset purchase program anytime soon. Moving on to the Aussie and the Kiwi now. The Aussie is not doing too badly. It's come off a little bit from the yesterday's highs, about 0.77. although it is being supported by overall higher iron ore prices in recent weeks. The kiwi, on the other hand, did come under some pressure this morning. We can see it had bounced back from Wednesday's lows, but it's currently trading around 0.7188. Both manufacturing PMI and retail sales numbers were disappointing. New Zealand's manufacturing PMI dropped from 54.5 to 51.6 in January, and retail sales for the fourth quarter of last year missed expectations of 1.1 increase to rise by just 0.8%. So all of that had a negative impact on the kiwi. In commodities, we can see oil prices here. We had a big drop and then a big jump yesterday. The reason for the current boost is mainly we had some reports out of OPEC saying that the organization is willing to extend the current output deal, which runs until June. So there's a possibility that the current program may be extended beyond that. And this comes after the recent inventory data out of the US continues to suggest that oil inventories remain very much at near record levels. So all of that is pairing the oil's gains. I mean, oil has been consolidating since December. Even the fact that OPEC countries appear to be complying to the current deal. There's at the moment around 90% compliance. Oil prices have pretty much remained static. Let's have a look now at today's economic calendar. We can see there's not much happening today. We've got Eurozone current account numbers to be published shortly. There's going to be retail sales figures out of the UK. That's going to be the main data in the European session. We had a bit unexpected drop, of course, in December for UK retail sales. They're expected to rebound in January, although a weaker figure would likely have a negative impact on the pound because of other signs recently that consumer spending may be easing in the UK. In the US, there's not much happening at all. We don't have any major data releases. And also worth mentioning that US markets will be closed on Monday for President's Day, and that also explains partly why markets are rather subdued this morning. Thank you very much for watching, and have a great day.